So my name's Brad Ladisaw with the California Mortgage Association. I have Mike Belote here with California Advocates, along with Liz Knight. She chairs the Legislative Committee for the California Mortgage Association. Typically, when we have our board of directors calls, Mr. Belote gets on this call and gives us legislative updates. The last few years, it's been nothing but, oh, great, what do we have coming down the pipeline now? What are we going to have to do now? But the other week, he gave us a nice update, a cautiously optimistic update on a new bill that we currently have moving through that his team and Liz's team on the legislative committee have been extremely instrumental in getting moving forward. And this is in regards to the Moon case that kind of shook the private lending industry a couple years ago. So Mr. Belote, would you mind explaining for us here what happened with the Moon case, what's been going on the past couple years, and what we have moving through currently?
Well, I'm going to ask for some help from Liz on this, but the Moon decision was a case that started in the bankruptcy courts and moved up through from the bankruptcy court to the bankruptcy appellate panel, or BAP, and then finally to the Ninth Circuit. And it only was finalized in the Ninth Circuit on April, I believe, of this year. So CMA had participated as amicus in the case, but the decision, through a hyper-technical reading of the usury laws in California, created a problem for brokers who want to help borrowers with an extension, forbearance, modification. And I'm going to let Liz talk about the practical problem for CMA members, and then what we're trying to do here in Sacramento to fix it.
Okay. Well, the bill that we are talking about is SB1146, and it's important to note that, so for your records. This resolution to the problem is in that bill. And what had happened in the case, and it's a little bit technical, but it was a lender who had tried to work out either a modification or a forbearance on a loan, and it wasn't the originating broker who was working on this. So in the end, it came down to the fact that the lender had actually lowered their rate, but it was still above 10, and the judge they called it usurious because it was over the 10% mark, even though the lender had lowered it. But that's not really what we're talking about here, as much as the judge also said it wouldn't have mattered even if a broker had done it, because that's not what the usury laws say. That's not what 1916.1 says. It doesn't say that the lender can go in and change a rate, but it also doesn't say that the broker could go in and change the rate. It talks about only dealing with loans or forbearances, and that was our problem, and that's what we looked at, and that's what we're trying to solve with this legislation, is that to change the code section, and these little words make a big difference. We've changed the language so that any loan, any forbearance, any extension, or any modification is still exempt from the usury rules, and that's very important. And the last thing that we did on it was change the word the broker to a broker, and I'm going to let Mike go into that a little bit more. But on the practical sense, because of that ruling, it made it very difficult to now just extend a loan or do a forbearance or do a modification or anything, because the language just is not in that code section. Yeah. At this point.
And not to cut you off, Liz, but that was, I mean, it's a very good point that it's not even adjusting the interest rate through an extension or a forbearance or a note modification. It's potentially just granting one and leaving interest rate unchanged. Is that correct? If your initial interest rate was in excess of 10% and initially
Correct.
Exempt. Okay.
Correct.
Yeah, the practical effect, Brad, was discouraging brokers from taking the risk of helping out a borrower with a loan mod or extension or forbearance, because the penalties for a usury violation are so draconian. And better public policy ought to be to encourage CMA members to help out borrowers, not discourage it. On the other hand, usury is a very controversial subject in Sacramento, and the courts, including the Ninth Circuit, acknowledged that the result of the decisions might be harsh for borrowers, but it was a strict, even hyper-technical reading of the statute that was the problem. Well, that's what we do here in Sacramento, is we revise statutes to fix problems. SB 1146 is carried by a friend of CMA, a state senator from Santa Clarita named Scott Wilk, known Senator Wilk for decades. He's a good guy. And he had introduced SB 1146 primarily dealing with trustee issues and some further cleanup of SB 1079 and what happens if you can't conduct a trustee sale because of a act of God or something that prevents you from doing the sale at that location. Some very, very technical workaday issues for trustees. But it was also a perfect bill to amend and deal with the Moon case. So when the Ninth Circuit affirmed the appellate bankruptcy panel, and we still had a problem, then it was time to ask the legislature to fix the problem. You should be proud of the work done by your CMA legislative committee, of which Liz is co-chair, because that's what we do. We read the bills, we seek amendments to the law when necessary, and so forth. So we amended SB 1146, as Liz noted, to make two clarifications in Civil Code section 1916.1. The first was to uniformly refer to loan modifications, extensions, and forbearances throughout the statute. So it didn't matter how you characterized the transaction. It was that was you're going to be good whether you call it a forbearance, an extension, or a modification. But the second problem was an implication that the second broker doing the loan mod had to be the same broker that did the underlying loan. Well, that's a problem, obviously. The same broker could be out of business and retired and living in Tennessee, or could unfortunately be deceased. You obviously can't make a loan if you're no longer with us. So why there's no public policy reason it should have to be the same broker. As long as a real estate broker is doing the transaction, the usury exemption for real estate broker arranged loans ought to apply. So we made those very, very technical changes in Civil Code section 1916.1. And as we sit here today on August 1st, the California legislature is within days of ending the 23-24 legislative session. This mission must be accomplished by midnight August 31st. As amended with the Moon fix, the bill passed the Assembly and is now pending in the state Senate, where we hope it will continue to move through without controversy in August and go to the governor for a signature. If signed, it will be effective on January 1st, 2025. But again, that's what CMA does through the legislative committee in Sacramento. And it turns out, and you'd be proud to know, although there are associations representing realtors and title companies and mortgage bankers and credit unions and commercial banks, there's really one organization in Sacramento representing CMA members and what you do, and it is the California Mortgage Association. We are the sponsor or the co-sponsor along with the trustees of this bill, SB 1146. And because usury is controversial, your legislative co-chair, Liz, has been on the phone with consumer groups representing the Consumer Federation of California and the National Housing Law Project to explain the Moon problem and explain why they should not be concerned about our change. They should welcome our change because we are encouraging borrowers' ability to get loan mods, extensions, and forbearances. Obviously, if they can't get any of those, the ultimate upshot is foreclosure. And no one should be for that. We should always be for encouraging borrowers to have good loans and stay in their properties. So we are guardedly optimistic. We don't have any opposition. We will know in the next 4 weeks, and it'll go to the governor in our fondest hopes, and he'll sign the bill and fix the problem. So you should be thankful for CMA, thankful for Liz and her legislative committee, and we'll get back to you with an update in the coming weeks.
And Mike, I think you make a couple great points. I mean, we are in the loan business, which is the people business, and I think that carries through to the legislator as well. I mean, emails can come across nasty at times when they're not meant to be, but it's the human interaction and the direct channel to Sacramento that I think is extremely important, and to highlight here that we're not here trying to pull a fast one. We're here to implement best practices and then also explain some of the repercussions of some decisions. And it's in a team-like environment. And I think CMA's large voice and growing voice in Sacramento in a positive way it is absolutely remarkable. So what steps, Liz and Mike, can CMA members, industry participants do over the next couple of weeks? Should they be reaching out to their local representatives? Is there something we can share for them to reach out? What would be the best thing to do?
I'm always for people reaching out to their assembly member or state senator. Sometimes people don't know the difference, frankly, between who their assembly member is and who their member of Congress is. This is a state legislative matter, so you'd want to contact your state legislator if you're so inclined. And I'm not asking that we make a big deal out of this. We don't have opposition. It is a technical change in the usury statute, but it is a small, technical, but important change. And the message is simple. It will help you help borrowers and keep them in their properties.
Right. This was a very consumer-friendly change to the bill. So that when I was talking to the consumer groups, I explained to them why this was a consumer-friendly change. And they understand that once they heard what we were doing and why we were doing it and how it saves money and how it saves homes, they understood. And they're good about listening. They're good about understanding. That's why we feel good about this bill, because it was a very consumer-friendly bill and a very consumer-friendly change when we added MOON.
Very good. Well, I appreciate, CMA appreciates, the whole industry appreciates everything you and your teams have done to get this moving to the finish line. We're on the home stretch here, cautiously optimistic, but thank you both for everything that you've done and will continue to do.